Hello and welcome to Upside, where every week we look behind the headlines and bring you the real stories that affect our ecosystem. Today, Mads and myself, and we've got the EU is quietly cannibalizing its own AI Act. More cyber breaches, but what's really happening? Sergey Brin comes out of retirement. I put in brackets here again. SpaceX buying Cursor, or will they? Has Europe ceded space sovereignty completely to SpaceX? Wall Street opening a short on private credit. And predictions plus deals of the week. Mads, my good man, what is happening with you and how are you?
Delightful too, and delighted to be here. Dan had a good week. Just back from Amsterdam, went to the 0100 conference. Did a nice.
Why do you say that? Is it? And I don't even know why. Is it 0100, 0100? I don't even know what it is.
Do you know what? I've been saying 0100, right? Because we are British and we are in Europe, and that's how we say things here. And
Yes.
Everybody corrects me, and they're like, "No, it's 0100," and I'm like, "How can it be? It's a European conference in Europe, and why are we speaking American English?"
We want to be more American, baby. We want to be more American. There you go. We're manifesting the Yanks.
All right.
At time of press, DeepSeek V4 has just come out. So we're recording on the Friday. I think it came out last night. So this is the DeepSeek new model, DeepSeek V4, open weights, free to the world, benchmarking just behind Gemini 3.1 Pro. 1 million token context is standard. That's effectively like a stack of books or stack of novels. Working memory is default. So the US banning cutting-edge chips from China for the last 3 years has pretty much made no difference. The questions, I guess, is the compute moat still relevant? Is the thesis now bleeding? This is the other thing that I was thinking behind the scenes, is this giving Europe a potential way ahead? Is there something or some way that Europe could catch up on this? But Mads, this is your happy space. What's happening with DeepSeek V4?
So many delightful angles here, Dan. Just taking the time machine back to 2025, January, we all will remember DeepSeek came out at the end of that month, just around the time of Trump's inauguration. Model R1 dropped their first reasoning model, and NVIDIA lost nearly $600 billion of market cap in a single session, the biggest single stock drop in history. The low that day was $118. Yesterday's close was nearly $200. So it's up a lot since then, which sort of tells you that, yes, there was a buying opportunity, but markets maybe think that it was overblown and NVIDIA is right back on the top of the throne. Now, DeepSeek is back at it again. There's a new model, V4, and what's really interesting about it is that it seems to be bloody good. Now, we don't have any independent benchmarks yet because it was just released overnight, but what we have seen from their own in-house evals says that it is on par with Opus 4.6. That is Anthropic's almost leading edge model.
I did not know that. That's close. I mean, that's like super close.
It shipped on the 5th of February, that Opus 4.6, and we know that we've had 4.7 since then, but it's effectively being on par with a model that was shipped just 78 days ago. So if you want to be very crude about it, you can say that the advance that Frontier Labs in the US have on Chinese open source models right now is 78 days.
How have they done it? How the hell have they done it? I mean, we'll never know, I guess, but how the heck?
Well, we could speculate. There's some things we know and there's some things we can speculate. So one thing is that they are working bloody hard. It's a brilliant team of brilliant scientists in China. They keep creating some great innovations. They've created a hybrid attention model that has kind of mixes the way it does the training between different floating point algorithms and floating point paradigms, meaning that it's very efficient. It can run on very limited compute. Another thing that's really interesting is it's trained, so we are told, entirely on Huawei chips. So the DeepSeek team, they rewrote things from CUDA, NVIDIA's language, to Huawei's CAN, and they were able to train on the Chinese chips. And so that goes to show just, was there really a chip moat or semiconductor moat that was worth its name? The question one might ask is, what about Anthropic? I mean, we've been praising them and saying, how great they're doing. My suspicion is that in the short term, they're probably fine. We know that DeepSeek, they don't have enough capacity to be able to scale. They've already rate limited the new model. Our suspicion is that Western enterprises won't be quick to send their proprietary data and their proprietary code to Chinese hosted models. Why? Well, Anthropic, they've formally alleged industrial scale distillation, meaning that they're essentially saying, look, the Chinese labs used Anthropic models and effectively Anthropic IP to build the open source model.
Have to, right? This has to be, otherwise how the heck are they doing it? I mean, it has to be the way.
That is certainly the way it seems. And so if you know that that is the way the model company runs its business, i.e. IP infringement, are you going to send all your IP to them? And the guess is probably not. But that said, it's an open source model.
Yeah.
Go download it from Hugging Face.
Yeah.
And anyone can host. AWS.
The economics will speak, right? I mean, if you've got this incredible toolkit and it's free and you can manipulate it how you want to on a European box.
Yep. You can run it for a fraction of the cost. Probably a 20th of the cost of Opus.
Wow.
So that will have an implication. Now, things are evolving as we predicted. The models converge, open source catches up, and apps become the moat. And we talked about that last week. Frontier labs have to become application companies. And I think that's going to be the red thread running through a lot of today's session.
And that I think is music for Europe, because that's where the opportunity still lies for us. Again, we're going to talk more about that later.
Yes.
Loving it. Well, let's see how, I mean, one random question. Do you think this is going to affect any pricing in markets?
I think it's going to be an excuse to relook at NVIDIA's share price again. How could it not?
Or is it just expected? I mean, the cat and mouse game is quite extreme, right? So maybe it's all priced in and expected. I don't know if this is going to have a
Markets
rumble.
run on fear and greed. We can all see the secular traction of AI. There's going to be more AI. We're going to be spending more money on this stuff. And so everybody is piling into this, even though we've got issues around oil prices. We got war in the Middle East. You get all this stuff. Stock markets are still up. Well, it's because AI, right? It's everybody wants AI. And so every now and then people are going to look for excuses to, take a little bit of risk off, and probably an argument that today could be one of those days. Maybe not. If not, it'll be something else next week.
Yeah.
But the secular trend will still be there. There will be more AI.
Yep. Yeah. I mean, and there is a reality to this technology that is unbound, I would argue. But we'll see how the winners win and the rest of the field doesn't do so well over time.
Yes.
I want to talk about, according to reports, when the EU is going to effectively be gutting its own AI Act. So this has been dressed up as simplification, but I don't believe that that's what's really happening. What's going on behind the scenes is Parliament, Council and Commission are sitting down for their second trilogue. So this is all somewhat slightly controversial insofar as they do this behind closed doors, so nobody really knows what's going on. To backtrack, the original EU AI Act entered into force on the 1st of August 2024, but it was a milestone basis of enforcement. However, under the New Deal being looked at, implementation of standalone high-risk systems is going to slip to December 27, as an example. AI embedded in regulated products, i.e. medical devices, machinery, vehicles, slips to the 2nd of August 2028. But the kicking of the can isn't the whole story here. They want to move the entire juicy high risk, as in AI embedded in regulated products, out of scope completely, fold it into other safety laws, which actually smells like pretty much a repeal. So kicking the can, getting rid of some of the really tough bits forever. It looks like the EU's data protection team kind of lost the argument to the commercial team and the competitive crowd. Is that a fair assessment? What would you challenge? What does this mean for us?
To me, it looks like there is a recognition that a mistake was made, and now we're trying to rectify it. We're dressing it up as a number of other things. There's a bit of technicalities. We're moving something from one regime into another regime. We're saying, it's about simplification. Look, it probably at some level feels better than just saying, we were wrong, let's fix it. But that is probably in reality what it is.
We'll see. I think how will this kind of affect us? Is this going to in any way affect investing, startups, or how our ecosystem works? Or is this So what?
No, I do think it's important. There was an argument at some point that the EU AI Act could protect European AI, but I just don't really buy it. Making it super hard for our homegrown companies to compete is not going to help us.
Yeah.
And so I think this is about rectifying a mistake, but I do think we need to go on the offensive to actually win. You can't just correct mistakes. That's not enough. We need a proper inference chip strategy. We need to use public procurement as anchor customers.
Yeah, become buyers.
100%. Listen, does anybody for a second think we're not going to need billions worth of hardware capex to drive inference for public sectors in healthcare and elsewhere? Of course we will. Let's find a way to buy some of that locally. We need single market unification, 20th regime for companies. We've talked about it so often. There's so many places where there's still friction. We need to find a way to unlock the European pension capital so we can get more money into innovation. That's important. And we need to think about how we can get more energy to our data centers. Is that a nuclear for compute? Is it SMRs next to data centers? We need to find a way to remove those barriers that stand in the way so we can get the energy we need. I think those are the 5 major blocks we need to get right. Kind of fixing the mistake of the EU AI Act, that's sort of just the beginning, right? That's just cleaning up. Now we actually need a strategy to go and go forward with ambition.
Right, let's move on. Cyber breaches. There's been a few more. I've always been quite big, and I've had this as one of my predictions before on this pod, that we're going to see some pretty horrific cyber stuff in 26 and beyond. But I think this year we're going to see more. On Thursday, the UK's technology minister told the House of Commons that the health data of 500,000 UK Biobank volunteers, which is DNA, blood sampling, medical scans, lifestyle information, has been leaked and is for sale on Alibaba. However, an Oxford academic who's been tracking this stuff says there's hundreds of exposures. And I know that you've got some insight onto this, Mad. So we're going to come on to onto this particular breach, non-breach. The other news story this week was France's National ID Agency also confirmed that they'd had a breach, but this was a much larger scale. So this is 19 million records up for sale on the dark web. Data from ANTS, which is the French ministry's, the department that looks after driving licenses, national identity cards, passports. Basically, the French state's own identity registry is up for sale. And that's 1 in 3 adults. And there were a few other things I saw in the news cycle this week. Mads, what's your take on cyber and the nefarious things going on behind the scenes?
There are actually some different stories happening, as you point out, and they're quite different in nature. So around the cyber breaches, you're absolutely right. We had the breach with the French identity records, and they're being run by Atos, which is kind of an outsourcing firm, which is insolvent. So you've sort of taken this, very, very precious data, you've given over to an outsourcing company, which is on its knees, and expected them to be great at protecting it. And that's probably not the best way to do things. We've seen similar things in the UK. We saw Capita in 2023. They lost 6.6 million records. And again, there was an issue. Actually, the breach was detected quite quickly, but then it took a long time for action to be taken. The first safeguard had been put up, but then the process was broken in terms of making sure that things were followed up on. So the pattern here is that governments outsource data management, and then the contractors fail, and then you have kind of some real issues, real repercussions coming out of that. There are things you can do to address that, and we're going to come back to those in a minute. But I think let's just jump over to Biobank, because that's a story that many people have looked at through the same lens, but actually is very, very different. The Biobank was started in 2003 at Oxford, and the whole idea was, let's gather all this data on health, on, where we sort of say here, people's health records, there's the DNA, is all the stuff we need to gather to then give scientists the ability to research with great data sets. Now, back then, it's hard to remember, but 23 years ago, the world was a different place. And at the time, the view was, look, it's much better to have tens of thousands of researchers from all across the world access this data so they can help use the data to create new cures. And so the data wasn't kept proprietarily. It was opened up to the world, and you kind of had to sign an NDA. And if you did that, then you could access the data. Not only could you access the data, you could download the data. And lo and behold, 23 years later, we now find out that somebody downloaded the data and then put it up for sale. But you must ask, well, if you have let this data out to tens of thousands of people, that there shouldn't be somebody nefarious in that mix it's kind of maybe a bit naive. And so
Yeah.
I think there's been a trade-off there. Now, what's interesting is that China, they have a similar data set they've created, actually partnering with Oxford. So they could see the benefit of the approach. The data set's been created there, but under Chinese law, that data cannot leave the country. And so they've taken a very different approach to data protection, whereas kind of the UK approach was just come get the data, download it, access it, do with it what you want. So whether this is naivety of history decades ago that's catching up with us now, I think it's probably more that than a cyber breach as such. Although, of course, in the public discourse, people are happily mixing it all into one big thing.
I think it was quite interesting to read that the data had been de-identified and not anonymized. So my assumption is data has been downloaded. It's then been de-anonymized, as in you can match various data sets and then create a full data set, which you can then sell. So I think also there's this 23-year-old mindset, which doesn't play in the modern world. So I think there's a little bit of catching up as to how we think about running these programs and who has access to what. I'm sure that's already been thought through, to be fair.
Yeah, I think all this sort of becomes relevant in the context of national identity cards, right? Because we've been talking about that in the UK, and the government has been talking about this idea of the Brit card.
Will it ever happen, do you think? I mean, I just can't see the Brits actually ever going for it, because we've been so kind of mind bent. And we've got such a negative attitude to, even though we have passports and driving licenses and credit. I mean, if you want to find somebody, it's not hard, but we've got this resistance to these things, haven't we?
Yeah, and I think there's a lot of fear mongering, and perhaps also, I guess some people just don't like the idea of what they would see as big government, and don't want government to be able to look at this data across different databases. I do think if you want a modern economy, a digital ID is not optional. You can't have a digital economy if government can't verify who you are. You must
Preaching
have a way.
to the choir, my man. I totally agree.
And if we look around the world, Estonia was Soviet era until 1991, and they've been running digital identity at scale now for more than 2 decades. So I don't think we really have an excuse. I think kind of some of the things that got right in Estonia that we should copy is it's a distributed architecture. It's a data stays in individual agencies. It's not a central honeypot where you can go and just siphon off everything. And they've been very, very good around the auditing and the tracking, and everything that gets queried on you is locked, is visible to you, free on your phone. So if a public agency wants to query something, you can see exactly what's been asked for and when. It's state-owned IP, but it's open source. So that means instead of having sort of a big Fujitsu Horizon where you have some contract, or an Atos, right, that doesn't really know what they're doing, you have a lot of open source that's running this, meaning that it's been much easier to have different vendors compete. It's been easier to identify bugs. And you have selected disclosures by default, which I think is super smart. So the Estonian system allows you to prove you're over 18 without revealing your date of birth, as an example, right? So there are lots of smart things you can put into this if done right. But I think it's clear that the approach that was taken in the UK was almost the opposite. People started by saying it's about checking right to work. Gosh, we don't need a new system to do that. But there are probably things we do want help with, right? Making it easier to file your taxes, easier to get your NHS records, easier to file things in Companies House. Companies House is still struggling to know who we are when we file things. It sounds nuts. And they've tried to build now their own ID system. I mean, it's like instead of having one, you end up having 27. How is that going to be safer? It's just bonkers.
Sounds a bit nuts.
Yeah. So the question for me is not whether we should have a digital ID, but I think it's what architecture can make it as safe as possible. And there's definitely still work to do there.
I just wonder if having that conversation openly with the public would sway any opinion. I don't see, my wife's going through some health issues at the moment, and I don't understand why her health records aren't on her handset. Why? And I know there is an NHS app and we have private healthcare, but there should be some way of tracking, even on that simplistic basis, because every time she goes to a doctor or a health professional, they haven't seen her records, and she should have those and be able to talk with the people directly. So I don't know. It just feels so obvious and so simple and so straightforward. So I hope we learn. We're going to talk about Sergey Brin has come out of retirement yet again. He is now running a strike team inside DeepMind, and they are looking at closing the coding gap on Anthropic. So this week, the information broke the story. The leaked memo, Sergey Brin saying, to win the final sprint, we must urgently bridge the gap in agentic execution and turn our models into primary developers. So every Gemini engineer is now required to use the internal agents because they were using Anthropic Claude agents, which I think is a bit embarrassing. So they are now being told to use their own kit rather than using Claude to ship. Anthropic uses allegedly AI for nearly all its own code. Google uses AI for about half, looks like. Brin was also framing that coding is the unlock to recursive self-improvement, which I think we would all agree is the real prize. And whichever lab's AI writes the next generation of AI fastest, compounds first, and wins the race. So lots at stake here. But that also raises the uncomfortable question for us, which is none of our lot in Europe are even in the conversation. But if frontier compounding velocity is the real moat, maybe we can tie back at the end of this, Mads, to where should our sovereign AI bet be placed? But where would you start on this one?
I think it's really interesting to see what's happening with Google. I mean, if you recall, going back to the middle of November, just last year, Google dropped Gemini 3 with deep think mode and with the anti-gravity IDE to compete with Cursor. And there was a comeback story that really landed. And for about a week, everybody was talking about how Google was back in the race after a rough year.
I remember us talking about it. I was like, oh my God,
the whole world, right? Google is back, Google is back, Google is back. And then a week later, Anthropic shift Opus 4.5. And it was just like, okay, nobody's heard from Google since then, honestly, right?
And it still amazes me how far OpenAI has fallen from grace and still hasn't, in my mind, regained the mantle. It's still Anthropic up there, but I find it really fascinating to watch.
Yeah, I mean, right? So Anthropic shift 4.5, and then in December 4.6, January 4.6, and then now they've released 4.7. So we've just seen so much velocity from Anthropic, and it's been looking like Google was standing still. So clearly they know that they've got work to do. But here's what's interesting, because on one hand, you've got sort of that slight panic. And yes, Brin has now come out of retirement for, I don't know, what, the third time.
Yeah, wheel him out. We need another PR story. Wheel him out. That's fine.
Look, what do you do when you have a 300-foot yacht, right? I mean, you got to go see it every now and then. But here's the thing. Google owns 14% of Anthropic, okay? They have, just in the same week, they have inked a deal with Anthropic to sell $10 billion worth of TPUs. Okay, so on one hand over here, they're panic stations and we got to compete. But on the other hand, we sort of also own the shares in the company and we can sell them a lot of GPUs. I think it's pretty clever. I must admit.
Yeah. Well, there's the PR story, isn't there? And then there's the reality that goes on behind the scenes. I mean, people probably do know these days. I mean, when Apple was like, we are, the smartphone provider back in the day, and actually all of the devices were filled with Samsung screens and Sony this and other provision of that and Google licenses for the other. So there's the PR piece, I always think, with these things, and the narrative that the department wants to push, and then there's the real commercial reality that goes on behind the scenes.
Yeah. So look, I think Google is definitely, they have it all to do on the AI model front and on the agentic coding front. But if you look at the full stack, there's still some smart strategy that's happening. If you look at the models, what we've seen is that even with the anti-gravity IDE, so with Google's coding tool, you can still use the Anthropic model under the hood. So yeah,
really?
So it seems a bit incestuous when you start to unpack it.
It sounds very US government like. You're a national security risk, Anthropic. Oh, by the way, we're still using all of your models. And there's this, this very incestuous connection that still goes on. What about
you
Europe?
Asked about Europe. Yeah, you asked about Europe. Look, our play is in applications, not foundation models and not frontier compute, I think.
That's okay, though, right?
Yeah, I think that's fine. Look, in the end, it's always applications. I mean,
I think so.
Go back 50 years, right? In the 70s, 5 German IBM engineers said, we want to make applications. And IBM was like, who wants to make applications? We just sell compute, it's fine. And then they went off and they created SAP, which of course today is worth as much as IBM. And so I think you're going to see exactly the same here. Everybody is moving up the stack and into applications. We have another story coming up in just a minute, which is going to be exactly, talking more about this move to apps.
Yeah.
So everything I think is evolving in the way we've been talking about.
I mean, I've always been bullish on Europe and apps and the actual application layer, not just on public services, but in private markets too. It's just, this is to me is the super exciting place, and obviously slightly talking our book because this is where we invest. But I think this is from a European perspective, the real magic is coming to force now. But let's talk about that very deal, because you're talking about SpaceX striking a deal with Cursor for 60 billion. So on Tuesday, they announced the option to acquire Cursor. This is an option. This is not going to happen pre-IPO. I think it would have just muddied the water from what I can gather. But this is looking at a 60 billion valuation deal later this year. Sorry, 60 billion price point, actually, or to pay 10 billion if they break the contract just for the privilege of working with them. But this, looking behind the scenes, is not 10 billion in cash. It's 10 billion in compute access, I think, mostly. So there's some other, from what I can gather, some contractual finaglings that make this quite an attractive deal for SpaceX. The deal preempted a 2 billion Series D, which was hours from closing at 50 billion pre-money. So what SpaceX gets is the distribution. They want access into all of these engineering teams, which I slightly challenge, and I don't know if you have any thoughts on that. But what Cursor gets is obviously access to SpaceX's Colossus computer, 1 million H100 equivalents, GPUs. So this is access and distribution both ways. One thing I didn't realize was that Cursor is looks like they've got a $2 billion annualized run rate. I know this is all private money. There might be smoke and mirrors, but there's a lot of people spending a lot of money still with Cursor. 67% of the Fortune 500 as customers, and over 1 million developers using it on a daily basis. So if it happens, SpaceX is a rocket company, it's a satellite ISP, an AI training lab, and potentially a coding agent. And I think we probably will see the IPO coming June, July, which also made me think, when will Tesla be rolled in? I don't know if you've got any thoughts on that one, and when will Elon just call the whole stack X, which is his happy place? But anyway, ignore the hyperbole. Mads, what are your thoughts on this, and where would you take this one?
Well, it's a grok play. It's a commercial play. I mean, OpenAI has Codex for distribution. Anthropic has Claude Code for distribution. XAI has nothing. There's no application at the front, and so they need to buy one. And Cursor is XAI's coding front door, and the point is to distribute the AI model they've been building. Now, Elon Musk, he launched XAI as an ideological play, right? He was not happy with the way OpenAI was developing, and he's not very happy with Anthropic either. And so the truth is that it has become a lot more expensive to build that model than I think he thought. And the other guys are probably running faster and maybe better than he thought. And so he's figured out, if I don't have something, a great coding platform to distribute my AI, I'm just not going to be able to catch up. And actually, I think the coding as the monetization path is a good bet. I think it's a clever strategy for both
parties. Point, though. At that price?
Well, look, to some extent, it may be funny money. I mean, if SpaceX is IPOing for what, $1.7 trillion.
Is it 1.7 now? Yeah, every time I hear it, it's gone up.
What is 50 billion there? Yeah. If that's the play that gets you in the AI race. Don't forget, you have Anthropic and OpenAI raising at $800 to $900 billion. And so this is possibly the thing that could save XAI and Grok as having any relevance. I mean, otherwise, what is it? It's a place that you go and you get, a nice way to analyze the data on X, which is not a bad thing to do, but it's just a small niche compared to coding.
Yeah, okay.
So again, frontier labs are becoming application companies, and that's exactly the same thing we're seeing here.
Yeah. We'll see how this plays out. I'd love to read the contract. But anywho, let's talk about.
Do you want to tie it back to Europe?
Yeah, do it. Go for it.
So how does this tie back to Europe? I mean, Lovable is already building a European champion in design and front-end coding, and it needs to keep accelerating. Now, Anthropic is nipping at the heels. They've released their new front-end design tool, and it looks really, really good. Now, front-end web apps is maybe not the most interesting frontier, but it's certainly an interesting part of it. I think the most interesting is enterprise coding and redesigning how enterprise computing is done. And we know that another big aspect of this is physical AI. And so the next enterprise stack runs in robotics and factories and vehicles, et cetera. And again, it's about applying the AI to the real world. And I think there's a great opportunity there.
That's the world he's living in, isn't it? Let's move on then to, I saw the FT ran a piece this week back to SpaceX, which is basically saying that Europe has already ceded space sovereignty to SpaceX, and we just haven't really noticed yet. So for some context, Starlink has roughly 7,000 satellites in LEO orbit. Eutelsat, the consolidated European answer, has around 600. Starlink already supplies critical European military comms, commercial broadband, and increasingly government operations. Italy is in talk for a 1.5 billion euro Starlink deal. Ukraine's battlefield, as we know, has already got its communications running through it. So when Ariane 6 was late last year, it was SpaceX's Falcon 9 that put European Galileo navigation satellites into orbit. So there's a lot of connective tissue here. Iris 2, the EU's $10.6 billion sovereign answer, billion euro sovereign answer, doesn't launch until 29 at the earliest, with any kind of full operational capacity expected for another 5 years. So 20, 30, 31, something like that. We've got this big window where effectively SpaceX is our sovereign solution. A small glimmer of good stuff in Europe. So yesterday, as in Thursday the 23rd, French startup Univity raised 27 million. I know that's peanuts, backed by BPI France and France 2030 to build some sovereign space connectivity for European telecom operators. Are we giving up on space, Mads? Are we quietly building a different model? What's your thoughts on space?
I don't think we're giving up on space. I actually think Iris 2 is the right concept. I think it's probably the wrong scale, and the procurement is most certainly wrong, because we have this notion of allocating and procurement of allocating things and passing it out to different countries, almost sort of pork barrel basis, instead of just trying to find the best supplier for things. And that is really holding us back. There's nothing new there. We discussed it for a long time. I think Draghi, he was pointing it out as well. We can't compete if everything is tied into you must spend and procure this much in each member state or in each geography. So it has to be done on a more commercial basis. If you sort of take a first principle approach, you have to scrap the geographical return. And I think that's probably the single biggest obstacle today. And then I think you can really try and push competition in every layer around launch, about manufacturing, around components, around ground control. And you could probably learn something from the Chinese EV model, right? Which was when China was trying to get into EVs, you really let 1,000 flowers bloom. Lots of companies were pushed to compete with each other, and then the best ones emerged. And so,
but
I think
also with an incredible amount of government support, right? I mean, BYD is effectively a government operation if you look behind the scenes. So there's still a lot of government support.
Yeah, I mean, look, there's 10 billion euros behind Iris 2, which is not nothing. And how big does the number have to be? I mean, you can say 20 billion, 30 billion?
It depends what the outcome is. It depends what we're trying to achieve here. I mean, at what point do we I don't know, have sovereign capacity, I think, is the answer or the outcome.
I think Iris 2 is not a bad idea. I think it looks like architecturally it's correct. You've got a mixture of higher low Earth orbit and low Earth orbit to give kind of proximity, and then you have some middle Earth orbit to sort of act as the backhaul. So kind of multi-orbit design, which I think is probably right for Europe. Now, 290 satellites is not enough for serious service quality, so you need to up the size. And look, there's money behind it, but I think because you are trying to force this geographical return and try to parcel things out on a political basis, that's really what's hampering you. So I think if you inject more competition into the program, it's probably that more than more money.
Well, this is the same as we were talking about before, Mads. This is the same of setting the framework and then letting the markets do what markets do best, depending on the application that's required. So I think this is a very sensible approach if it comes off.
Yeah, agreed.
I want to geek out on some credit default swaps, if you will indulge me.
Do you now? Is that your happy place?
This is not my happy place, but I know that with your polymath brain, you'll be able to guide us because, obviously, I think it's somewhat in the public domain, credit default swaps, subprime, 2008. There's probably a broader knowledge than I think most would give credit for around what credit default swaps are. However, what I wanted to talk about was private credit specifically, and JP, Barclays, Morgan Stanley, Citi, all of these guys are now making markets in credit default swap, CDS, on the who's who of private credit funds, which is Blackstone, Apollo, Ares, This is a massive market, the biggest vehicles in a $3 trillion market. And there is now a new credit default swap product that didn't exist a month ago. But why do I want to go into this, and why do I want to talk about this now? I believe that private credit has a SaaS problem. Roughly 20% of BDC, so that's the business development company loans, the people offering the loans went to software companies in the low rate era. UBS suggests that 25 to 35% of the market is exposed to AI disruption. So there's a play here. Blackstone got $3.8 billion worth of redemption requests in Q1 and posted its first monthly loss in 3 years. Apollo paid 45 cents on the dollar of what investors asked for. So there's something going on here, and I want you to then help me pair this back to SaaS and Europe and what the real story at the real coalface for us means. But if European portfolios are benchmarked to US SaaS comps, they're already down 30%. Our exits, you could argue, run through USP roll-ups financed by these very BDCs and these loans, and there's a bunch of strings attached here and in other places. I don't believe this is going to create the crisis, the 2008 crises that we've seen in the past. I think there's a lot less impact, but this is meaningful, and I think it's meaningful for us. Do you agree? If so, how would you unpick this?
Old economy, new economy. I mean, if you're in an old economy world, and we've seen that companies like RELX and Sage and Wolters Kluwer and even SAP are down.
Yeah.
Right. So to some extent, we've already seen some of that hit in public stock markets, but we also know that a lot of the buyers of some of these companies that are private could have been large US private equity shops, and they'd be using some of this private credit to finance their deals or partially finance their deals. And so there could be an impact. If you're in I call it an old economy, right? So pre-AI type software business that has recurring revenue, yes, but recurring revenue that looks like it's vulnerable to AI disruption, then yes, you are at risk and you're going to be re-rated and your multiples will go down. So what do you need to do? You need to make sure you create new moats, you integrate more with other systems, you have more of a hardware component. You need to do all the things we talk about to make sure that you have more defensibility. And if you have more defensibility, I think you'll be just fine. I think you can build great companies. But if you're resting on the laurels of tech that was built 10 years ago, and all you're trying is to cut a coupon and rely on recurring revenue and hoping it will grow forever and never go away, and you're not innovating and yada, 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 then yes, you are at risk. And that's probably a good thing, right? That's the destruction of capitalism.
But it's the speed that gets me. This is quite a quite a speedy transition. So
it's fits and starts, and I think these things are always jagged. I mean, we just earlier in the program we talked about how kind of a year ago DeepSeek came out and NVIDIA took a bath, and now they're back up again. And because, as you're saying, there's so much disruption. AI is the biggest disruption of our lifetime. That's it. It's just the biggest thing we will experience, or certainly we have experienced. Right? It's kind of you and I, we're close to that half-century mark.
Don't say that.
I won't say who's on which side of it, right? We've seen some ups and downs. This is definitely the biggest, okay? And so it just means that those gyrations are going to be bigger until the market settles and decides which way the winds are blowing. But I think you're right. This doesn't feel to me like it's going to be the thing that blows up the global economy.
No. It feels like it could be one of the aspects. I was looking at, for example, the previous oil shocks, the 73, 79 oil shocks, and how long markets took to respond and how they responded over time. And it's not what I think, what some people perceive, which is just like one thing, one instant reaction, nothing to see here, let's move on. There's a period of inertia. And I think this is going to be one of those aspects where we'll see a lot of disruption and dislocation, but it will be a longer and maybe multi-aspect. There'll be other points that come into the play, I think, that will take this either way, but we'll see how it pans out. Right. What else we got? Anything else on your mind? Anything that we've missed before we move into I've got 2 predictions this week. Did you get to any predictions?
The question might be, so what should you look for when you invest in something? How do you make sure it doesn't get disrupted tomorrow?
Go there.
And I think the one thing we definitely look for is this whole notion of AI native organizations. So it's not enough to build AI into the product. You have to build it into your organization and how you work.
But Matt, question for you, Mads, on that one. Does that mean that you can't retroactively transform, or is it just an absolute pivot? How does that fit for I don't know, existing SaaS startups?
I think they have fantastic data access. They have fantastic distribution. We've seen existing companies like Intercom really not only protect, but re-accelerate revenue growth because they really leaned into this and found ways to use AI in an agentic way to get more done internally, but also to get a lot more done for their customers. So I think Intercom is a great case story of how to
So
do
it can
this.
be done. It can, if you
100%.
are legacy, it can be done. Yeah, okay.
100%.
Yeah. I wonder if the size, I wonder if the bigger you are, I'd like to look at this once the dust has settled and see if the larger organizations just can't get there and maybe the mid tiers and the smallers can. I wonder if there's a size quotient in this. We'll see how it plays out. Anything else on the kind of the way to think about this or the outcomes of this disruption?
Well, so AI native, I think, is one thing. And then the other thing is the moats, they don't fall to a model because the models are commoditizing. So you have to have proprietary data or you have to have physical to digital integration, right? The physical to digital bridge is much harder to replicate with a model. And so business is still built in the good old way of creating moats. It's just that what constitutes a moat has changed. So you got to keep up with that.
Yeah. And I think that's also leaning into this kind of softening for investors looking at hardware. So that kind of that hard moaty thing. There's the brand side at the top end and there's the narrative and all of the story around your brand. And then I think at the other end, I think there's a softening to investing in hardware and the connective tissue into the physical AI piece where we play. Cool. Okay. I'm going to share 2 predictions with you and then you can shoot me in the face. First up, here we go. The next $1 trillion European company will be a defense prime, not a software company. Yes or no? Would you go? I'm going to go big and bold. Would you go with that?
Helsing is a software company, isn't it?
It is. Well, is it? Question.
Isn't it?
I don't know how to classify it.
Isn't it just all blending together? I mean, the truth is software is no longer a separate industry. Software is eating the world and just embedded in everything.
Yeah. Full stack. I don't know. My other prediction was a bit of a random biggie, but I don't know what you think about this. Anthropic will cross 100 billion and it will never IPO.
Look, it's the forecast. At this growth rate, they'll hit 100 bill this year. It still feels like a stretch to me, but I wouldn't write it off. In terms of never IPO, I think that would be sad. I think it's one of the 5 most important companies on the planet right now. It has to be a public company.
I just wonder, it feels like there is still, it depends on what happens, I guess, as the IPO window unlocks for these big firms this year. But I think there's still an argument to stay private for longer. Anyway, we'll see. What is your deal of the week, my good man?
It's a German-French company called ATMOS Space Cargo. They were founded not long ago, 2021, and they do something that's super cool. They've just raised a 25 million euro Series A to bring cargo back from space. Yes. Now, the Americans have ways to bring things back from space. The Russians have ways to bring things back from space. But in Europe, we actually haven't really had a way to bring stuff back home. And so that's what ATMOS Cargo is looking to address. And I think it's super cool. And kudos to them for a great Series A.
Loving it. One thing that I missed last week, it's my deal of the week, but it's a slightly older deal of the week, was the European Commission investing just over €1 billion in 57 new defense via EDF, so via the European Defense Fund, investing in 57 projects. So they had 410 proposals, a 37 year-on-year bump, which makes complete sense because I think everyone has woken up. And they're funding the European Drone Defense Initiative, Eastern Flank Watch, European Air Shield, European Space Shield. So there's a lot of money flowing into the defense and the resilience piece, which I thought was
is it grants or procurement?
I think it's grants. I think, don't shoot me. I think it's grants. Don't be unhappy. Yes, it's the other lot, but it's still money flowing, and then some private, I'm sure, will follow, and then some the wins. There'll be some procurement and some purchasing. So I'm hoping this is the bedrock rather than just becoming grand entrepreneur.
And by 2035, we might see something real emerge. Is that what you're saying?
Well, you are such a cynic, but yes, I'm with you really. What's happening the week ahead? Anything in your diary coming up?
Well, you talked about the EU AI Act Omnibus and Trilogue, which is next week. We've also got something else that actually is quite cool because as we've just been nagging on European space, Ariane 6 is flying and launching 32 Amazon Kuiper satellites. Now, why would they be going with Ariane? Might be something to do with the fact that their main competitor would be the alternative to launching at Musk over at SpaceX. So they're using the European satellites, European launching capacity. So that's a nice thing. We'll take it. Next week is big earnings week. We've got Microsoft coming out. We've got Alphabet coming out. Meta, Amazon, they're all reporting on Wednesday.
Any predictions? Any shockers?
Oh, I couldn't possibly tell you. Of course, I know exactly what they're going to say and which way markets are going to move. There's $14 trillion of hyperscaler market cap on the line. So watch that one. Apple is also coming out next week on Thursday. And the same Thursday, we got the Bank of England. They have the Monetary Policy Committee, and they're going to be talking about rates. And now, why is that interesting? Well, because we were hoping for and expecting 2 rate cuts this year.
It's not going to happen.
Because of the war, it looks like it will be somewhere between hold and hike.
It's got to be hold. It's got to be hold. It can't be hike. It's got to be hold.
Probably on this one. But for 2026, it looks like rates could go up, which obviously is not what we want.
But I was looking at food inflation. It's going to hit 10%. I mean, I don't know. This is such a mess. Such an unholy mess. Okay. That is it, I think, my dear fellow. I enjoyed that. Thank you so much. And we will catch you all next week.
Gift and a pleasure. Right back at you.
Upside.